Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your daily technical analysis of foreign exchange markets.
Euro-dollar. A bullish long white Mariposa yesterday that was also a third bullish white soldier. Prices punched up and closed over, the capping April 2020 low at 107.25, the May 2020 low at 107.66, and motored through as if it wasn't even there. The fleeting combination of the upper bull channel line, currently at 108.05, which is highlighted in green, and that's of the recent October-based bull channel, plus what I thought would be some pretty heavy-duty resistance, but turned out not to be so. And that's of the medium moving average, currently 107.89, and the long moving average, currently 108.02. These latter two had only just formed last week a dead cross. Prices then rose through a fairly free area overhead until they were capped by the previously broken February to September bull channel, specifically the lower bull channel line, currently at 108.91, which is highlighted in dark blue on my daily chart. This raises all sorts of questions, not only about the recent green bull channel, but also the older broken dark blue channel. In the process of rising higher, the market reached target X1 at 108.05. This was the secondary harder to reach target for the earlier breakout from the mid-July to late October bear channel, which is highlighted in bright red on my daily chart. What we now have are the new potentials on the upside of the breakout higher from the smaller October to November dark green bull channel. Thus, a primary target X would be in the 109.98 area, with a secondary hard to reach target X2 up in the 111.11 area. Just be cautious about a possible throwback to the upper bear channel line, currently at 108.05. Now, so far today, a somewhat unsurprising small pullback after yesterday's strong move higher. Cable, aka sterling against the US dollar. A bullish long white Mariposa yesterday that was also a second bullish white soldier. Prices punched up and closed over the declining short medium moving average, currently at 122.81, and most importantly, the 50% Fibonacci line of the June 2021 to September 2022 move at 123.16, which had defined the top side of the recent trading range. But that was not all. Prices pushed up through a free zone up to and through the flatlining long moving average, currently at 124.43, which had capped the market last week. The rise carried on until the market approached the next overhead resistance, which was the flatlining medium moving average, which I highlighted in mauve on my daily chart, and is currently at 125.11, where they stopped short and closed. As I said earlier, this is a clear and big break up and out of the recent trading range, and in the process, prices achieved target X for the almost retired late September, early November double bottom pattern, Adam and Eve type, in the 124.85 area. There still is the secondary harder to reach target X2 alive in the 125.60 area. The only thing to watch out for now is a cautious possible throwback to the long moving average, and even down to the 50% Fibonacci line. So far today, a seeming bearish opening black Mariposa, which is now approaching the long moving average below. Euro sterling, a second bearish black Mariposa yesterday and a suitable follow-on lower to the previous session's bearish engulfing pattern. Prices stabilized below the April 2021 high at 87.19 and tested down below the lower bright red tine, currently at 86.98, of the late August to early October bullish shift pitch hook, down to almost the gold-colored declining long moving average, currently at 86.82, before pulling back up to close just over the tine and the lesser Fibonacci line at 86.98. This continues to be a strong reactionary move against last week's immediate countering weekly key reversal up. Overall, the market remains within the late September, early October based bull channel, currently at 86.61 to 87.75, which is highlighted in purple on my daily chart. We have also now above the significant congestion of the April 2021 high 87.19, over which we've had limited closes despite numerous attempts higher. I'm still wondering if my recent decision to retire the potential topside targets for the June to September roof pattern with a harder to reach secondary target up in the 88.18 area, whether its retirement was a little premature. Now, so far today, a basing on the red lower tine with an attempt up over the April 2021 high, but then falling back towards a lower tine. US dollar against the Indian rupee. Wow. Simply wow. I thought we had a big piece of action on Friday with a big move up on the upside, punching up through August high at 83.44 to make a new all-time high. But yesterday's bearish black Mariposa and second bearish black crow takes things to another level. You see, with the last 3 days action, this market set up the opportunity to make a monthly key reversal for November already. Thus, for a monthly key reversal, if we have a close on the 30th of November, either over 83.26 or under 83.03, then we'd be on. Anything in between would have the lesser outside month pattern. Right now, we're looking at an outside month pattern, but there is still time to go. Back to yesterday's action, and that was based on Monday's close back down on the extension of the downtrend of the late July to late October ascending triangle pattern, currently 83.19, highlighted in dark blue on my daily chart. And last Thursday and Friday's 2-day descending hawk pattern traditionally seen as a bearish reversal. Prices tested up to the significant October 2022 high, 83.27, and used that as an overhead base to charge lower through the rising short medium moving average, currently 83.14, and below last month's lower 82.94, though stopping short of testing the lower and rising medium moving average, currently 82.84. Now, I previously laid out potential targets below for the recent break below the July to October ascending triangle pattern, with a primary target X in the 82.45 zone and a secondary, harder to reach target X1 in the 81.45 zone. I had been considering retiring them, but this recent action and the opportunity for a monthly key reversal in November has placed those ideas on the back burner. However, I am still nevertheless minded to once again caution you on the possibility of false breaks here in either direction, just in case. Now, so far today, a reactionary move back up through the short medium moving average, but halting at the downtrend extension before pulling back below the short medium moving average and looking like a possible bullish harami right now. US dollar against the Brazilian real. A bearish opening black Mariposa and bearish engulfing pattern, just on the latter, yesterday. The base of the market's action was the overhead broken upper tine of the July to September 22. That's right, September 2022. Bearish shift pitchfork. And prices dropped down below the 2021 low at 489.08, but halted ahead of testing the 50% Fibonacci line of the June 2019 to May 2020 move at 484.26, plus the nearby lower purple highlighted trendline extension to the August to September rectangle pattern, currently 483.46. Overall, this continues to be a further continuation lower after the weekly key reversal down 2 weeks ago towards the lower end of the breach, but ultimately still valid November 2022 to date bear channel, currently 468.97 to 514.42, as highlighted in bright red on my daily chart. The most recent incident involving this bear channel had been the upper bear channel line capping the market in early October. In the process of moving low, the market has created a possible bearish halfway hesitation over the last 2 and a bit weeks, with potential down to the 476 even zone, or conservatively, if it plays through, of course, that is, conservatively, the 50% Fibonacci line of the October 2018 to May 2020 move at 477.54. US dollar against the Mexican peso. A bearish closing black Mariposa and third bearish black crow yesterday, closing right on the key support of the rising medium moving average, currently at 17.3399. This support was most recently seen as the low 2 weeks ago. The market was capped by the declining long moving average, currently 17.6329, and on the way down, punched down through and closed below the recently significant August 2017 low at 17.5693, and for the first time since late September, closing below the July 2017 low at 17.4362, before finishing at the slowly rising medium moving average. Further down we have the combination of the broken upper bear channel line, currently at 17.1462, highlighted in dark blue on my daily chart, and the unusual neckline of the February to April head and shoulders top, currently at 17.1840, my apologies, highlighted in dark green on my daily chart. Overall, the recent actions have been a more than suitable continuation from the break below the mid-September to date lower bull channel line, as well as below the late September to date ascending triangle. So, this still leaves us with targets further down for the break below the ascending triangle pattern. Thus, for such a pattern, we had a primary target in the 1767.05 zone below, and a harder to reach secondary target X1 down in the 1704.90 zone below. The primary target was reached 2 weeks ago. On top of this, we had a double top for the action since late September to early November, and for such a pattern there was a primary target in the 1736.45 zone and a secondary harder to reach target X4 down in the 1703.70 zone below. The primary target was also reached 2 weeks ago. So far today, a small reactionary move back up, but then a reapplication of the bearish incentive for a move below the medium moving average and yesterday's low, and towards last week's low at 1727.78.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.